undamaged area is 1% of coverage A. So the insurance company does not have to pay the full amount to match it. Why? Because buried deep into this specific or particular policy is a 1% matching clause. That's right, 1% matching. So 1% matching, what does that mean? When one part of your property is damaged and the insurance company is supposed to restore it or fix it, at least in a reasonable uniform appearance, not patchwork, not close enough, not similar color. We're talking about uniformity. Think about your roof, think about your siding, think about your flooring, think about kitchen cabinets, think about all of these things. So if one section is replaced and the rest doesn't match, then you don't have restoration. What you have is visible damage disguised as a repair. So the 1% matching basically puts a cap on how much the insurance company is going to pay to achieve that uniform look again. So in plain language, let's say if the cost to match the undamaged area is 1% of coverage A. So the insurance company does not have to pay the full amount to match it, right? So for example, if your policy is a $400,000 policy and 1% of coverage A is $4,000. So if matching your roof, siding, your flooring costs $20,000, the carrier will only owe $4,000. The rest, now that becomes your problem. Why is this dangerous for property owners or even investors, large real estate portfolios, all of these huge condominiums and all these things, these malls? Why is this important? Because you have to understand. Now, why is this dangerous for property owners? This is where the real damage happens. And I'm not talking about wind or water. I'm talking about the financial damage. Why? Because now your roof doesn't match, elevation is inconsistent, property value drops, your buyers see it, the tenants question the quality, the HOA may even have to get involved depending where you live, and all the carriers say is, we paid according to the policy. And they're not wrong, and that's the part nobody's talking about, because they're not wrong. According to the policy, if there's a 1% matching and they paid it, they're not wrong. And these endorsements quietly show up on roof claims or siding, flooring, cabinets, multi-unit apartment or rental properties. They show up where uniform matters visibly and financially. You have to remember, matching is not cosmetic. Matching is tied to the market value, usability, and function. A roof that doesn't match is not just ugly, but it signals potential failure. So now, how insurance companies are using this strategically, right? Let's just step into the mind of the carrier for a second. They know most people don't read the endorsements. They know contractors can't challenge it, and most claims won't even be escalated that far. So what do? Apply a cap, issue payment, and then close the file. From their perspective, it's clean. They were supposed to do. From your perspective, this is incomplete restoration, plain and simple. So our fight back is not just about the matching, right? Now we have to strategically reframe the claim. So it's not just, you really have to reframe the whole claim. It's not just going to be issue of matching anymore. You have to bring in availability issues, discontinue issues, manufacturers, specifications, installation requirement, code compliances, system integrity, because sometimes isn't just a matching issue. It becomes a repair versus replace, and that changes the whole thing. So you got to look at different things, right? In the policy, right? The loss settlement provisions, replacement cost language, law and ordinance coverage, definition of like, kind, and quality, any endorsement that modifies coverage, because endorsements like this don't just stand alone. They interact with the rest of the policy. And that's exactly where the leverage is going to be created. So let me be clear. This is not about blaming the insurance company. This is about understanding the contract you signed or the contract you agreed to. Because once a loss happens, the policy becomes the law inside the claim, basically. So once the loss happens, the policy is law. And if you don't know how to read it, you're negotiating from a position of weakness if you don't really understand how to read it or really understand what's going on in the policy. So 1% matching, trust me, it's small in wording, but it's huge in impact. It makes the difference for restoration or the difference of you living with a partial repair. And most people don't even know it's there until it's too late. I got to give you this and I'm gone. If you own a property in Florida or especially in Florida, that has these 1%, or you're not sure if it has a 1% matching endorsement, and you need somebody to review your policy before a loss happens, not after, before a loss happens. The worst time to learn that you have 1% matching is when the loss happens and you're in the middle of a claim. So remember, where policy meets strategy is where the claims are won. So man, please like, subscribe, keep up with the channel. We appreciate everybody's support. Capital Claims Group.